Hi guys, thanks for joining me again. Today I'm going to tell you and show you what professional traders think about, how they think that makes them successful. I'm going to tell you what goes through their mind when they're in trades and what they're thinking about before they take trades that triggers the trading action, whether that's going long or whether that's going short. Now, I've modelled professional traders and become a successful trader myself and trade professionally. And if you want to do the same, and I'm guessing because you're watching this video, you'd like to be a successful trader, then you need to be thinking about these things. So keep watching. Give me a thumbs up if you like the video, and do subscribe for more of these type of videos. So let's get straight into it then. What are these guys? What am I thinking when I'm watching the charts? I'm reading the charts, and what am I actually reading into the charts? Because the chances are that successful and professional traders are thinking differently from beginners, and they're thinking differently from people who are losing traders. So what do you need to know? You're about to find out. Here's a piece of price action. Now, this could be any type of price action, but professional traders will examine this price action in the minutest detail. Now, this actually is a reversal. It's a reversal. The market has gone from going down to going up temporarily. And so what is actually happening, and how am I thinking? Well, I'm taking what I call perceptual positions. So I'm taking different perceptual positions. I'm reading the market from four standpoints or four viewpoints. And the first one is the bulls position, and these are the bulls that have already taken trades. So at the end of every candlestick, I quickly flick my mind into the position of a bull. So a bull that has bought down here, what is he thinking when the trade closes here? Okay, so that's the first standpoint. The second standpoint is from the bear's perspective. What is a bear thinking here? Is he thinking I'll go short, or is he thinking I'll just wait and see? So what about the bears that have taken shorts here? What are they thinking? Okay, so I'll do a review after every candlestick of the viewpoint from four different perspectives. The third position is the bulls that in their mind they think the market's going to go up, and they're going to be prepared, if they get the right price action, to take a trade long. Okay, what are they thinking, and what triggers are they looking for to go long? Okay, and also, of course, there are bears watching. There are people who think the market is going down. It has been going down, you can tell, because this 20 exponential moving average is moving down. The shorter term exponential moving average is up and down, so that could indicate some kind of change to me. Okay, but there are some bears that are waiting and watching and ready to pounce after every bar. Okay, so these are the four positions. These are the four positions that we're taking in our mind in order to assess the market position. And what we're thinking is, what's going to trigger each one of these into taking action? What is their next move? You know, these people, these bulls here who've taken trades, they're either going to add to their position and take another long trade, or they're going to exit their position, which means selling. Okay, so when they add, they buy. When they sell their long position, then when they exit their long position, then they're selling. Okay, these bears that are in play, they're either going to add to their position. They've taken a short trade and maybe down here, and they're either going to add to their position, or they're going to just exit it and think they're going to take a loss. That's the only thing. They're the only orders that they can take. And bears, when they add to their position, they sell. When they exit their short positions, then effectively they buy. Okay, these people here, these bulls, they're either waiting and looking, or they're going to take trades. Okay, and they're going to take long trades, so they're going to buy when they get the right signal. These bears who are waiting and watching, they're either going to continue to wait or they're going to enter. Now, this is a complex skill because there are 4 different positions that you've got to take in your mind, and you'll be one of these people. You'll be one of these people, and you need to consider all 4 angles. Now, this is, as I say, a very difficult skill, and you don't pick this up overnight. You know, it takes a long time, and the best way for losing traders or beginner traders to really understand is to look at the charts, watch the charts, and notice what's happening. When are these people buying? When are they selling? When are they exiting? When are these guys exiting? When are these guys exiting? And when you get 2 or 3 acting at once, and that means placing orders at once, and they all agree, then you get big candlestick bars like this one. And that's what you need to be taking into account, and that's the sort of trade that you need to be looking at taking advantage of. Now, every piece of price action, we've got, 9 bars on here, but any 9 bars will be completely different, but they follow similar patterns sometimes. And when you get a pattern that you recognize and that produces this sort of bar, then you can take advantage of that. And you need to consider things like risk and reward, potential reward. You need to consider things like, the probability of the move in one direction or the other. And the probability is affected by how these guys are thinking and the actions that they're taking, because their thinking will translate into action as long as the candlesticks do what they think it's going to do. Okay, so just let's have a look here. We got you can't see the whole of this candlestick, but this was a green bodied candlestick, so it went up slightly. Again, it went up slightly, and again, and again. Now, these are doji bars. That's a doji bar, that's a doji bar, that's a doji bar, and that's a doji bar. And, did traders make money on those bars? Yes, they did. There are 20 points in between these numbers here, and each candlestick bar, these small candlestick bars, are probably 15-20 points long. So there's money to be made buying at the bottom and selling at the top. However, that is a very difficult skill. And how do you know where the top is and where the bottom is? You don't, and that's the thing. So you need to wait for setups, and that's what we do as professional traders. So what is happening here, and what's the psychology in all of this? What's making, what decisions are these guys making that is affecting the price action here? Okay, so let's have a look at this candlestick bar here. It opened here and closed here, and it went right up to the top and it went right down. Now, the chances are it went down first. So what made people sell here? Okay, well, selling could take place by bulls exiting, so thinking they're not, it's not going to go up, and that could be because it hit the 8 exponential moving average or got close to it, and they thought, well, it's been going down, I'm going to sell. Okay, and these guys who are waiting and watching and they're getting ready to sell may have thought, any of these spike downs here, may have thought the market was going down, and they entered and they took trades short. Okay, so this went down first, this candlestick, and then it went right up here, and then it closed below the 8 moving average. Now, anytime it leaves a tail like this or a wick on the candlestick, then you've got traders who are in potentially losing positions. You've got people who bought here all the way through here, and the candlestick finished up down here, and they will be, when the candlestick closes here, they will be in losing positions. You've got people who sold down here, and if they didn't get out already for a loss, then they're in a losing position because the candlestick closed up. So most professional traders will not, they'll make a decision and they'll not necessarily have a system that means they have to exit after one candlestick. They'll exit after several candlesticks that all say the same thing, and they'll take the bad news, but they'll wait because you've got a trap here, you've got a trap here for bulls, trap here for bears, and the next candlestick did almost exactly the same thing, except it closed above the exponential moving average. So it opened on it, closed above it, but in the meantime this candlestick went down, went up, and the last move was down. Okay, now as I say, you've got losing traders here, you've got potentially losing traders here who've gone long, and you've got potentially losing traders down here. So the pressure is building up. There are lots of people watching and waiting, ready to make a decision, but they need more information. And so you get the next candlestick bar, and that went down first of all through the moving average, went down and then went up and left a tiny little wick on the top of the candlestick. Big tail. So again, big rejection. These bars went down and finished up, and that's a warning sign to the bears. Okay, but there'll be bears here who are waiting to add to their, they've got a losing position. Not many will take trade short, but some will. Bear in mind that the market hasn't really gone up. It's getting close to the 20 moving average, and when that bar went up there, it opened here, it went up slightly, rejected. There'll be bears going short here, short here, short here, short here, all the way down. And then when the bar starts, and that would have been a winning trade for some of them because they will have got out here, 12,300 round number level, and then this candlestick started eating its tail, and when that happens, it's a warning sign. There are lots of trap traders who didn't get out down here, thinking this is going to continue going down. It's a breakout below these lows here, possible small trend line there, breakout, and they want follow through, and they want it to come down here somewhere. Their risk will have been up here, so that's where they knew they were wrong and they would get out if they entered here. And so they need an equal reward for their risk. And down here, if a trader had entered here short and got out down here, they would have got one risk, one reward, 1-to-1, and that's probably why the 300 level also, but probably why that worked and traders started buying. Okay, lots to think about here. That's why you need a system. That's why you need a system, so you don't have to, you just look for the same pattern repeating itself. You don't have to do this analysis every bar, but it is useful to do it, and when you're skilled enough, you will be able to do it. Okay, so there was enough pressure going down here. What happened was these bulls who bought in here, bought up here, they exited. And people went short as well, and that pressure forced the market down until there were no more people selling and there were only people buying, and they bought up. And this was a warning, 1, 2, 3, which says I'm buying. And when it came down here, they said, are you not listening to me? I told you I was buying. So all of these people who sold here, because it looked like it was breaking out short, and when it looks like that, beginner traders think I'm going short, and they don't take any notice of the fact that it's a long way from these averages
and when the market gets a long way from an average, it tends to go back to the average, which is what it did. And so people will have made profit going short here, going short in the red part of the bar. They will have made a decent trade, and they'll be exiting. And then there were no sellers left, because that tail is, it's about half of the size of the bar, and they've already had warnings. So it's going up. Now, there'll still be bulls who will be watching and waiting here, because they'll wait for it to, perhaps go above the average. And when the market went up, higher highs, higher lows on 3 consecutive bars, then pushed down. So you've got a red bear bar here, red bear bar there, with a higher close and a higher low. And when you get that, then this trend leg suggests that here you've got an uptrend. Certainly here, as it crosses the top, you've got an uptrend. Higher low, higher high, in. People go in long, and anybody who's short exited. There was big consensus there that the market was going up, and it did. You see this pattern all the time. Little tail on the top. It's a long way from the averages, and the shorter term average is below the longer term average at this stage. So that's a good profit taking position. 12,350, good profit taking position, good reward for the bulls who spotted the fact that the support level, resistance level here had been broken. It's gone through the averages. There are people buying all the way up. Short-term traders there taking 10 points up from 12,340 to 12,350, even 5 points in there. And algorithms who noticed, the algorithms are set to do all this work for them, and they will have seen the higher low, higher high, and triggered in a long trade there. And then the market's a long way from the moving averages, and there were people buying, and there'll be losing traders here. These bulls will be in a losing position at the end here. Some of them bailed out, some of them added, expecting higher highs. And that's what professional traders look at. Now, look at this. This is what we were just looking at, and then the next day you get something almost the same. It's not identical, but it's almost the same. You've got tails on the bottom of the bars. You've got a failure to go high, met by consensus that the market was going to go down temporarily. The only winners in there were the bears. And then the bears conceded defeat here. The market went up and then tried to push down again, but made a higher low. When the market crossed over the tops here, you've got a higher high, and there was only a bull position to take for those watching and waiting, and you've got people exiting their long positions here because the market's way above, at this stage, the market's way above the averages, and the shorter term average is below the longer term average. When you get here, it's nearly visited the exponential moving averages here. It's come back right down, and you've got a crossover. So that's a good position for the bulls, and they all agreed that they were going to go long until it got too far away from the averages, when it got pushed back down again. And that's also the 12,100 level here. Okay, so that's the type of thing that you need to be thinking about. You need to design or learn systems that take all of this thinking into account. You can't, it's impossible for a beginner trader to think about all of these things, but when you recognize the signs and the traps, and you recognize when an uptrend leg's beginning and when a downtrend leg's in place, when you recognize these things, when you train your brain to recognize these things, then you'll do it automatically, and you don't need to go through all the process of thinking 4 positions within 1 second. It's very quick. But of course, the longer term charts, you're able to do that every candlestick, on every candlestick, at the completion of the candlestick, and do your analysis during the candlestick. You know, if this is a 4-hour chart or a 2-hour chart or even a half an hour chart, you look at that and think, if it goes down a little bit and then starts going green, I'm going long. And you've got time to do that, because you've got, you know, it's that's closed on its high. The bears, what are they thinking at the top here? They're thinking, I'm getting out of my position, I'm wrong. And that adds to buying pressure. The bulls are thinking, if I get a little tail on this candlestick, then I'm going long. And when it went green, they went long all the way up to here. So these are the type of things that you need to be thinking about, guys. I hope that you've found that useful. More on the way. My name's Anthony Beardsall. Thanks ever so much for joining me, and I'll see you on the next video. Cheers for now.